Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On today's show, we've got some earnings. We're going to recap that Gilead action from yesterday and how it impacted the market. Dennis is going to talk about a trade he made in that. We're going to talk about what else was on our radar we were just discussing. Why it's a bad idea to short stocks that are going bankrupt or stocks that are under $1 in general. So that'll be the theme of the show. Our guest is Greg Weldon from Weldon Financial. He would join us at 8:35, give us his thoughts on the market. We'll bring Joel on now. Joel, give us a quick recap of what happened in the overnight session.
Yeah, we've been up, we've been down, but we're up now. We're up 18 handles at 27.9875. Week close, follow through down to 27.55 and a quarter. I have absolutely nothing there. We turned around on a dime and went up to 28.07, and I don't have anything there either. So we are just hanging out just above mid-range on the session. Definitely a nice gain here, considering where we were at one point during the overnight session. Crude, another good day here, up 3%, 52 cents at 17.01. Remind me next time crude goes zero to buy it. You have gold up $13.10 at 17.58.5. Silver having a good day as well, up 11.8 cents at 15.475. Bitcoin down $80 at 7,555, trying to move towards 8,000. Triple D, we're going to bring you in here, but are you looking forward to the weekend?
Trying to get myself off mute. Yes, I am. I need weekends here, although my weekends aren't as fun as they used to be. I will say that much. So it's like, what are you going to do this weekend? Probably do everything else that I just do all week because I don't go anywhere. So, eventually, obviously, maybe I'll go for a drive. It'll be exciting.
You know what?
Yeah.
I look forward to it because I have someone to talk to besides Perry for the entire week. I mean,
why is that?
Why
don't you have anybody to talk to during the week? Is Elisa working all week?
Yeah.
She's been really busy, eh?
Yeah, she actually saw as many virtual patients in the office as she did with as her regular patients. And she says that she's connecting with these people and they're like, can you hear me? Can you hear me? And, she has some elderly patients. She says sometimes she spends 10, 15 minutes just getting them hooked up on Zoom and everything. But no, it's just to have someone else around the house and talk to. I really actually, my car was in the shop this week, so I really didn't go anywhere. So looking forward to the weekend. But we got a whole day of trading action before
One more day. One more day.
What are you seeing out there?
Lots interesting market yesterday. And I want to start talking about the Gilead news that brought the market down significantly. And funny trades for me, like I've been saying, I've been really doing well with my trading account lately. March was my best month in 10 years. April's not going to be quite as high, but it's going to be pretty good too. Probably my second best month in 10 years. But I'm not only trading well, sometimes you just have luck too. When it seems like when it's going right, it's going right. When it's going wrong, it's going wrong. And we know we go into bad spells as traders. You're going to have those spells where it's going to turn and go wrong. So you got to press it when it's going well. I had an order in my long-term account, my brokerage account, to buy Gilead right near that trend line at $77. So if you bring up to the GILD daily, you'll see what I'm talking about. I had it sitting out there because we know I sold the pop and I wanted to rebuy the stock. Anyways, in my long-term brokerage account, I get a pop-up message when I buy something, and I was actually not even at my trading desk, and I get this pop-up message, bought Gilead, and I was like, I looked at Gilead like a half an hour ago, it's 83. How the hell did I just buy it at 77? And then I'm like, going to Twitter, I was like, oh my goodness, the drug's a flop. So I'm running back down, getting and logging in because I'm like, I don't want to own this if the drug's a flop. And by the time I log in, it was halted. So it was halted down at 76.55. I was like, oh, this could get ugly because it probably hit limit down, right? So it's probably on the circuit breaker, it's halted. It reopens and then starts popping up. And I'm looking at it, I was like, I want to get out. And by the time I really get all ready and logged in, the thing's trading at $80. So I'm like, I probably would have scratched, like been willing to scratch that trade. And I had not read anything at this point in time. I had just, heard that this trial was a flop. And I'm like, I need to get the hell out of this stock. And I turn around and I sell it at $79.99. So I made 3 points on it. And I didn't even want to own it at that point in time. So then I do some reading. And I'm like, well, this is data from China. It was a stop trial. It's inconclusive. And I'm like, I don't know if this is really that bad. And then Gilead's defending it. I'm like, I don't know if this is really that bad. I'm like, you know what? I want the stock. And by this time, the stock was already trading down the 75 handle. So anyways, by the time, I get all organized, and I'm looking, because I really wasn't at my trading desk again. This was middle of the day, and I don't trade at 1 o'clock, 2 o'clock. The stock's down, and I think I rebought. So I rebought my shares again at $76. So I'm back in Gilead again. Last night, Piper defending it. So literally, I've scalped 9 points on my long-term account on Gilead. Then I just immediately scalped another 3. I was in the trade for like literally 2 or 3 minutes. And now I'm back in. I bought at 76, low 76, and I'm up a couple points here again. But my thought process was, once I've done all of my analysis here, is that this wasn't, necessarily a flop. This was inconclusive data, really. And then Piper's defending it last night, saying that some of the data wasn't even correct, that the one doctor that was on there said that the data wasn't correct. It's coming from China. We don't know what to believe from China half the time. So I'm like, I still think it's a wild card that the data, could show some this therapy. How do you say it again, Spencer? Here I own the stock, and I never know how to say this thing. Remdesivir. How do you say this?
Remdesivir.
Remdesivir. He always says them. Spencer's good at this. I can never say these drug names. I don't know why they just say drug 1, 2, 3, because I can never say the names. But under that analysis, when I'm just looking at it, I'm not a doctor, but I'm just reading between the lines. I'm like, I don't think it was a flop, and they really hit this down. I don't think we can conclusively say it was a flop yet. So they slammed it yesterday on the assumption that it's not working. They're starting to buy it back here this morning, people thinking along my train of thought that, well, we don't really know yet. So I'm back in Gilead. Long story short, I got lucky, made 3 points, and made 9 points, and which was good. And then 3 points of BS luck yesterday. And then I'm back in it again. So I played it 3-4 times. I bought it from this area. It's the 3rd time I bought it from the 76 area in my longer term swing account. And I'm in it again for a swing.
It's a story, and actually, I was discussing with a buddy of mine when that report actually came out, and he really dissected it, and he did not. Yeah, at first he was excited, and then he was really disappointed because of the size of the control group. And we were just a little bit skeptical. I did it.
Well, there was no control group on the original one.
Yeah.
Which is an issue.
We do own it in our long-term portfolio. And
you do own it still.
And we're never going to sell it, because every time I tell
Lisa
you,
doesn't sell.
Lisa doesn't sell. So, I was thinking about a shorter term, scalp trade on it. It never got anywhere near the pre-market highs. It got up to like 89. So I never played it.
On the first day.
Yeah. It's like one stock in my portfolio that I really not necessarily the size of my position, but I really wanted to be right, because, that means that they came up with something.
Oh,
so
yeah.
I'm a fanboy on it. So I really can't give you an opinion, I won't sell it. I'd love for it to go higher. I see your rationale behind it, Dennis. It's really been in the trading range. Volatile filled the gap from that one day, which is good, and then recovered. Good support here. Actually, if you were really sharp, that 74.40 low, that coincided with 2 lows from April 15th and April 16th by 7 cents and by a nickel, if you were really fine-tuning your technical analysis on it.
It was really trading in a fast market all day, though. Like the chop, you can see initially, like in that first candle when I got filled at 77, it looks like a solid line. If you look at yesterday's chart, when it got back up, it almost went to 81. Like I said, I got out in the upper 79s because I hadn't even read anything yet. I just didn't want to be part of something that was a potential flop, so I got out on the bounce. And then I was reading, I was like, I don't think this is a flop. And then it was already back down at that time, so I was able to rebuy it. I mean, if you were sitting out there at the 74 and change low there, to get that, you'd have to have an order sitting out there 74.40 because it was not out there long. It traded in the 76s for a while though, so that's probably why I was able to buy it in the low 7. I think 76.35. I think that's where I bought it. So I'm back in. And it's a wild card. If this thing pops, on good news next week up to 83.84, I will sell it again. If it flops, again, when a point that Greg's making here too is that I never minded Gilead. Like it kind of started, really in this low 70s, was really where it started. Think about even before COVID. The stock was 68, to $70 before we even had COVID on the table. So this is kind of just a wild card for it. I think in a worst case scenario, obviously there's never a worst case scenario, stock can always go down significantly, but I think if the jug is really a flop, I think it's back at the 70 area. And then you still got a company that's not trading with a ridiculous valuation. So it's kind of like one of those, I like the company, I kind of wanted to own it for a while, and you got the wild card. I've already had some luck, scalped 9 points, scalped 3 points, up 2 points here. Obviously, I'm not going for just the 2 points though. I'm hoping that they have some okay numbers from when they release their own data, which they're saying could be as early as next week, and the stock gets another lift on it.
Yeah, for sure. And who did they buy that for growth?
Well, Kite Pharma.
Yeah, Kite, January of last year or the year before.
Didn't they buy someone else you own, Dennis, though?
Did they buy Jazz? They bought Jazz?
No, Dennis.
No, it was Kite.
It was Kite, but I thought there was someone.
Well, there was one I had taken over. Oh, man. It was a spinoff from Biogen.
That was Bluebird Bio, no, wasn't it?
No.
Well, Bluebird Bio is still going. I've been saying for a while I still like Bluebird Bio. I always thought Bluebird Bio could get scooped, but this is not the kind of market that anything's getting scooped up in, so I'm not buying anything on. We haven't any M&A. We're not going to get any M&A for a while, I don't think. So I'm not buying stocks on any potential M&A at this point in time. But I've always kind of liked Bluebird Bio.
Ooh, we got a request for Boeing here. Boy, oh boy.
Wild.
Is that well, it looks like it's wild, but then you look at the daily and it
looks you're right. Looks dead.
Yeah.
I take that back.
I know.
Consolidation station.
Yeah.
Place your bets.
Yeah. 135 to 142. And look what it's almost in the middle. You hold 135, you're going up. You get over 142, you rally. And boy, they faded that move last Friday, huh? On that news, 154 high on Friday, and then you came in. So consolidation station here. I could not tell you what to do between 135 and 142 here.
And it all depends on the market as well. If you think this market just continues to buy the dip, which it does, like I am so torn in this market, and I think everybody is. We have been hanging around the 50% retracement of the move here for 2 weeks now. For 2 weeks. We came back up here with Craig Johnson on the show. He thought if we got over 280, we're running to 300. We did get over 280. We have not run to 300. We're still set the same place. So I kind of took the other side where I thought we'd fail at the 50% retracement, but we didn't just fail. We've held up long enough that I don't want to be short. I don't want to be short the market here. I don't want to be long. I'm just kind of just going to go with the flow. So I think a lot depends on what Gilead says when they're with their drug again next week. We saw a 1,000-point Dow rally when Gilead had positive results. And then we saw Gilead potentially have the flop come out yesterday, and the Dow, only sold off 200 points.
I know.
So it's like going to go up 1,000 when you get potential good news, going to go down 200 when you get potential bad news. It's a tough market to be short in. So I don't see a reason to come in here and like just bet bearish. We're going right back down to the lows. But, again, I don't know if I see the reason to just get all in either. I have been buying pullbacks in individual names. People, have been talking about, what are you doing in your longer term portfolio? I use the opportunities. I talked about this before the earnings season started. I said the way I'm going to rebuild my longer term portfolio is buying the dip on stocks, good companies when they announce disappointing earnings. And there's going to be some that will do that. Some are going to rally on disappointing earnings, like Las Vegas Sands. But Las Vegas Sands is not my definition of a good company here right now because they're at ground zero. I don't know when they're going to come out of it. Great company. I shouldn't say great company. It's not my definition of a great stock because I don't know when they're coming out of this. Obviously, it wasn't their fault. But I'm not buying any of the Carnival Cruise Lines, the travel stocks, the restaurants. What I'm buying is stocks that I don't mind owning if we're in a lockdown for a prolonged period of time that I think are going to survive. What I bought yesterday, I talked about it on the show. I was talking about that I was going to do it. I bought Target. I bought Target on the dip yesterday. I actually bought it right after the show in the long-term portfolio. I bought it right after I got done the show around 9:05. Because I don't like to buy the stocks and on the show. I'm on my longer term stuff. I like to talk about the idea and then go and do it. And so I bought $100.50 is where I bought, which is actually the low of the day, but I bought in the pre-market, which wasn't the low of the pre-market. Obviously, I traded lower into the 98 handle. But I'm just looking and I'm thinking, retail, big retail, Walmart, Target, Costco, these companies are going to still get a lot of sales even if we're in a prolonged lockdown. So, I don't mind owning Target here. So I use the dip opportunity to buy Target. Another dip that I've bought recently, just a few days ago, and I talked about this stock too a couple days ago on the show, is this FLIR Systems, FLIR. My friend Mike was talking about it. I talked about it on the show twice now, that they do the infrared cameras. So if we are trying to reopen the economy, there could be eventually a demand for the products that this company makes. And it's also got a dividend. It's not a crazy valuation. So it's not like this is just a penny stock that's all in on the on infrared cameras, but this is obviously a potential COVID play, I feel like. And I feel like it could eventually get from the thermal imaging, I'm saying the infrared and the thermal imaging. I feel like this could eventually get some media attention. It had the pop up because they got, there was a potential contract from Amazon. We talked about that on the show. It's had a nice little pullback here now. I've used that pullback to start a position. If pullback's a little bit further, I might add to it more. But I feel like this is, a potential COVID play and a stock that, has a business. I mean, this isn't like a penny stock. So this is a real company. So I don't mind owning this one too. So that's two that I bought recently.
Yeah, I just to give that little bit of perspective on things here, talking about the market, where we're at. The week of March 27th, we had a 460 point range. This is in the S&Ps. The week of April 3rd, when we started to rally, 210. The next week, 3.25. Last week, 174. This week, 158. And this is for the week, folks.
What are you talking about?
The weekly ranges in the S&Ps. The consolidation here.
Oh, okay.
Yeah. All right. So like we
daily range, like you're talking your daily range.
These are the weeks range right now.
Okay. So give them to us again because I didn't know what numbers you were talking about.
I'm sorry.
Throwing out numbers and I'm confused.
Okay. The week of March 27th, our range for the week, high to the low, was 460 handles.
Holy mackerel.
Okay. We calmed down the next week. We only had 210. Right?
Yeah.
The next week we did 3.25 when we started to come up. Okay. Last week, 174 was the range for the entire week. And the range for this week so far is 158. So, we're winding up. And we're winding up at an important level, just above the 50% tracement. I agree with you. I mean, are we just going to hold here and blast off to 3,000? I couldn't tell you. And are we going to fail here? Like everyone thinks we're going to fail to 50% retracement and drop back to, 2650, 2660. It's just, it's just a coin toss here. And I don't know.
It's hard.
So far with earnings season, we're holding in there. What else can you say?
I mean, the earnings, exactly. The earnings at Las Vegas Sands were a disaster and the stock's rallying on it. So it's hard to be like full on rah, bear, I'm short in the world. I'm short nothing right now, like nothing in the long-term account. Nothing really in the swing trading account either. So, obviously I have day trades that are long short. I trade market neutral most of the time. So I'm going to always have some longs and some shorts in my day trading account, but I'm trading market neutral there. So it's hard. I'm just going to keep trading, buying the dips and selling the rips. I mean, that's what's been working. I've been talking about that for a month. The dip buying was even working when we were going down because they gave you lots of rips to sell as well. So, Gilead's poster child for that right now, buying the dips and selling the rips. You're selling the rip when it ripped up 9 points, you're rewarded. You're buying the dip when it fell 7 points yesterday, you're rewarded. So there's buying the dips and selling the rips have been working for a long time.
Let's do some earning stocks.
Wait, I have a couple of things I want to interject with. First thing is I learned a valuable lesson with the trade on FLIR the other day. I have a small trading account through Webull on my phone. It's one of those new trading apps, and it's not on my computer. It's only on my phone. And I put the trade on, and I forgot about it for like half the day, and I came back and everything I wanted to do was out the window. So if you're going to place a trade through your phone, it's so easy. Don't forget about that. I forgot it. I had a trade. I just forgot about it for like most of the
you're
day.
in Fleur now too, or no?
No, I'm out now.
Okay.
But so that was my first thing I wanted to say. Second thing, good question here in the YouTube chat from Ticker Vault. If I can go back to Gilead for just 1 second.
Sure.
Dennis, when you talk about relationship trading, are you looking at other relationships, other stocks related moving off of Gilead? So like, for example, maybe Regeneron or Moderna, or other stocks moving off of the Gilead.
I mean, they're moving on their own data as well. So all of these, and this is why the biotech sector has been so strong, why the IBB, I believe, if I'm just looking correctly, I believe the IBB kissed almost to an all-time high. We're very close to the 2014 highs. We got to go back 133.60. We haven't got up there, but we're starting to come back. The reason the IBB has this relentless bid underneath it is that every biotech stock seems to be working on something here. So we don't know who the winner is going to be. So you can kind of like, pick your poison. I think Regeneron is looking, and they're more on the vaccine front of it than the therapy front of it, to my understanding. Sanofi, which I own, I bought SNY in my long-term portfolio. SNY, I believe they had earnings today, or they were supposed to have earnings. Anyways, 48.71, it's trading up a little bit. It's trading in Europe, but I bought that one in my longer term portfolio. Again, the financial transaction tax on that one, so they knock 0.3% off your price when you get dinged. But I like it enough that I think, that they're one of the leaders. They're working along with GlaxoSmithKline on a potential vaccine, but there's so many drug companies that are working on this that they all kind of have underneath demand for them, it seems like, because the market is rewarding highly any positive data that we get from any of these companies. So we don't know who the winner is going to be. We know they're all working on it. But there's been a relentless bid in most of your drug stocks.
Does it just have to be one winner?
No, absolutely not. There could be multiple winners here, for sure. I mean, obviously, at the end of the day, I think if there's a vaccine, it's going to be this one or that one, or maybe there's going to be multiple vaccines. Who knows? I mean, we don't know exactly. It's not going to be that easy. It's not just like, okay, let's make a vaccine and move on with our lives. To my understanding, and I don't know if this is true or not, but I saw one doctor was saying this, that they've never successfully, created a coronavirus vaccine, like a one that just holds, because they could morph, it could do some different things. I'm not sure if that is true. I read that from a doctor on Twitter. I don't know if that is true or not. Maybe some other people can verify that, but it sounds to me like the process is not going to be that easy to make a vaccine. Let's just slam this and get this done. So it could take a while. Like, people who think we're going to have a vaccine by the end of the summer, that's not what Scott Gottlieb's saying. And Scott Gottlieb's on CNBC right now. I've been following him, and everything he says just makes a lot of sense. And, he's saying 18 to 24 months for a vaccine. So, that's a long time. So, if you think you're going to get instantly rewarded with a Sanofi or GlaxoSmithKline, there's probably going to be hiccups. There's probably going to be ups and downs, but they're not going to create a vaccine next week. So this is a longer term play. The therapy is a completely different story. All the drugs that are working on therapies, we could get a therapy that works next week. It appeared that Gilead was doing something good from Adam Fierstein last week, and then China's obviously saying the opposite. So, we've had, Adam Fierstein coming out, and, he wrote a report that it was looking pretty good on some data in Chicago. China's come out and says it's not looking good. So we've had conflicting data here, so we don't know where we stand on that. But if you're playing for vaccine, it's going to be a lot of headlines. There's going to be some ups and downs on those. If you're playing for a therapy like in a Gilead, you want more instant gratification, I guess.
You know who I think has a vaccine for the coronavirus? Perry.
Your dog?
Yeah.
Why?
This
is the weirdest tangent we've
they
ever
do
went
have it. They do have it. I believe they do have it for canines.
Not where I thought that was going to go.
What?
Yes.
Joel, are you dreaming things in your sleep again?
Merck
has dreaming things up.
Merck Animal Health USA has a canine coronavirus vaccine,
but not for COVID. They just have a coronavirus, like for regular.
I didn't say COVID.
There's a lot of different coronaviruses there. It's confusing too, because we say coronavirus, COVID. Obviously, the flu, I believe, is a type of coronavirus. Is it not? Isn't your normal, like, everyday flu a coronavirus? Or
I believe so.
I don't know. I'm not a. All I know is I read the doctors a lot. And one doctor had some report that, or he tweeted out, he's saying that it's very difficult to come up with vaccines for coronaviruses. So I don't know if that's true or not, but it doesn't sound like it's an easy process.
Okay, let's do some more earnings.
That was a weird thing with the dog.
It's true. Lisa told me.
Lisa knows a lot more than we do, so we'll
Okay.
go with Lisa. Let's do Intel
Okay.
last night. A little bit of a chip wreck here today. INTC disappoints. Your classic, maybe you want to buy a dip. I don't own Intel, but I'm not opposed to it. Give me the numbers.
Yeah, earnings, and they gave some guidance. I like that. So the adjusted EPS for the Q1 for Intel, $1.45 versus $1.28 estimate. Sales of 19.8 billion versus 18.7 billion. So a beat and a beat for the Q1 numbers. And as far as the Q2 guidance, they gave an EPS range of $1.10. They gave EPS guidance of $1.10 versus $1.19 estimate. So a little bit light on that. Sales 18.5 versus 18.7 billion dollars. So the guidance was light, I guess to be expected, but at least they gave something.
Gave guidance.
Right, exactly, which is great.
So question, if they came out and just flat out said we beat and said we're not updating guidance, is the stock down $3? Because the guidance was light. So now the algos have a number to trade on, right? Do you think it's down $3 if they just did what everybody else did? I don't know. That's because obviously it's down because they guided down, but I mean, they gave guidance and it wasn't even that bad. I don't mind this Intel dip. I don't own the stock. I don't know if I want to buy the dip on it. I'd rather have it.
I thought you'd be trying to short this one the way you
Why?
were talking yesterday.
I don't short in the hole, first of all. So I'd
No, yesterday. Yes.
Oh, ahead of the number, maybe, yeah.
Because of that,
I did talk about it.
Because about that Apple news.
Yeah, I talked about it yesterday on the show, and that's a good point, is that Apple coming out with their own processors is not good news for Intel. And I was surprised that they held Intel up yesterday. It did end up starting to leak into the number. Now it's down significantly. So, off the earnings, you would have actually made money on that. It was around $60 when we were talking about that. It's 56 here now. If I was short, I'd cover it now. But I'm not. I never had a trade on it. I don't even think I took a position on it. I'm inclined to buy the dips on good companies. Intel fits that bill. I don't know though. The Apple news spooks me a little bit. I'd love Intel in the lower 50s.
Yeah.
I was not 56. I don't think it's a big enough dip for me. But you know what? Dip buying is working. I would not be surprised if this thing is back up at 60 in like a week. It would not surprise me at all.
I did look at the pre-market low. I think it came in at 55 and a quarter, and it just looks like you have a patient buyer in that area. No one not lifting offers and not paying 55.90, but just through the after hours in the pre-market, you made your low really early, and then someone just hung around, right that area. And then it got up to 56.5. They weren't interested anymore. And now it's coming back on. So until it, if you're really looking for a major washout on this thing, you need to take out that pre-market low at 55.28. But just right now, just feels like there's just buyers there from let's say 55 and a quarter to 55 and a half. Nothing as discernible as that pattern that you had in Snap the other day. But that it kind of just feels like it, and you don't really have a daily low there to back it up. Your next daily low, if you're really looking for a beat down, your next daily low comes in at 52.73. At your April 3rd low, I don't see that coming into play today.
Let's jump over. Last night was pretty light for major companies reporting. So there's a couple big ones that reported here this morning. Now let's go to Verizon, Spencer, because this really chopped around again. Those who are buying the initial dip here on Verizon are rewarded. This is just this underneath demand. I think there's money managers thinking the same thing that I am. They're sitting with too much cash, and they're using the dips to buy them. The dips don't last long.
That was a quick dip.
Oh, yeah. But if you were out there, you had a shot.
Our numbers for Verizon: EPS $1.26 versus $1.23. Estimate sales of 31.6 versus $32.44 billion. So a mixed report. Obviously, revenue from the media side of their business is down, but revenue from the internet side, I believe I saw was up. So
it dipped all the way down. Is that right? 55.86.
Yeah.
Gift. Almost down $2 on Verizon. I saw it down the 56s. I did not see the 55.86 print, so that one was really fast. I saw 56.5. You could have got 56.5, which is down $1, and it was back up literally within a minute. So there's just underneath demand on these stocks. When they're dipping on the initial headline numbers, I mean, the news algos, I don't understand how this even makes money. Maybe it's selective perception on our part. Maybe they're getting the good ones and we're just noticing the bad ones, but holy mackerel. Like they rip it. What stock did they rip yesterday? Domino's Pizza. They rip it up to $400 yesterday. And within five minutes, not even within 2 minutes, it's back down to scratch. And the Domino's Pizza numbers were awesome. So you would think logically that algo is pretty smart. It reads those numbers and buys everything, but it's not the market we're in. The market has been selling the ones that have really run on good numbers and buying the ones that have really fallen on bad numbers. That's the way this earnings season has played out.
Durable goods down 14.4% versus 12% estimate. That's bullish. Market rallies off. No, market rallied off that news.
That's how it goes.
Yep. With Verizon, I'm going to throw out that low. That was a quick low there. I'm just going to go to the dailies. And where we current? Well, we're in the red by a little bit here in Verizon. Let me look at the daily closes here. 57.59. I think, I don't know, it just kind of feels like 57 is the number. You had 56.72 low 3 days ago. That was near, I don't know. This is a tough call. It won't break out.
It's tough to be a buyer here.
It's tough to be a buyer, and it's probably tough to be if you want to short it here, you got to give it over 60.
And you got AT&T that had pretty good numbers, and they bought it, and they dipped the stock. So AT&T really, did not do well on their numbers here. Verizon's had a hell of a run. We went from $49. Like I said, if you're sitting out there and you get filled 56 on the initial bounce, I'd already probably would have sold it. So I can't. It's kind of a coin flip here, but I'm more inclined. I'm on the fence on this one. This is a really tough call. This is a curveball.
What's it go X?
What's
it go X again? Do you know?
I think it just went X.
Really?
I feel like it just did. Yeah, I feel like it went recently. Let's go check it out. I feel like it just did. Like in the last week. Verizon, because I feel like I played it. I'm pretty sure it just went X. I can remember playing it. It went X. Oh no, it's come. No, April 9th. It just went X.
Okay.
So it just went X 2 weeks ago.
So
I felt like I just played it. And the way I do the dividend capture is I usually buy them, a couple days before, and they often have a run up ahead of the dividend, and then usually they show.
Then you know what? That would have been one that they would have been buying hand over fist during the decline, especially.
And it ran right up into the X dividend date again. It worked again. That trade just works. AT&T, same story. Look at AT&T. 2-3 days, it went from like 27 up to like 30 right before the ex-dividend date. Same thing. So I believe AT&T went ex-dividend the day before, if I'm not mistaken. I'm just going to go grab it.
We got to write that one down.
I'm telling you, that trade works. That's just a lot. Yeah, April the 8th, it went ex-dividend. It works. Buying ahead and selling after.
Jared R., I think he's new to the show. He's asking about Harley Davidson. Hog.
I've not looked at this stock in a long time. I'd imagine it's not doing well, though, and my imagination is correct.
Yeah, I mean
8.2% dividend now on Hog. Is it still paying that? I don't think they've cut it. That's still active dividend? Wow, it's a nice dividend.
Yeah, looks like it.
Hard to be a buyer of anything that's making, the PE is 7. The dividend's awesome. You look from a valuation perspective, you're like, what don't you like? But are people really going out and buying new motorcycles right now? I think you're just not in the market for it. We're in, we're a situation where a lot of people lost their jobs. I mean, this is just tough, and that's why it's trading with this depressed valuation. With that being said, I don't know if I necessarily want to short it. It's got a nice dividend. It's not trading with a crazy valuation, but just the situation the economy's in, and we are in a recession. It's just a matter of how long that's going to last. If it starts to come out and starts to look okay, maybe I'd get interested in this, but I can't buy a stock like this at this time, not knowing how long we're going to be in a recession for and how long, we're going to have to, be in social distancing.
Yeah, I mean, unless you're looking like a technical player or something, because you did come from 34 all the way down to, where'd you bottom out? 1572. So if you're, looking in here, just a couple bucks is kind of like a technical play, and they say something halfway decent in earnings, a pop, but I have to agree with you on that one.
Greg making a great point in the chat. Greg Gorell, he's saying that this stock was in decline a long time before COVID came. And we've said that as a rule of thumb on the show. The stocks that were weak before COVID are really weak here now. And those are the kind of stocks I don't want to own. I want to own the stocks that were actually doing well before COVID. I don't want to own stocks that are in secular decline. So it's difficult. The dividend's attractive, the valuation's attractive, but the dividend and the valuation have been attractive in Ford for a long time too. And now Ford did Ford cut the dividend? Did we get rid of the dividend in Ford? I feel like they did.
One of them did and one of them didn't.
I feel like Ford did. And in chat, if you can verify that or not.
I can't remember.
I feel like they did.
I think you might be right. Whoever I think GM did and Ford didn't, but
I feel like Ford's dividend's
remember. Gone. You might be right. I honestly can't remember.
I think GM's is still there, and I think Ford's is gone. Can anybody verify that in the chat? I believe Ford did get rid of the dividend.
Yeah, well, we can check quickly, but I want to bring in our guest right now, Greg Weldon from Weldon Financial. Greg, maybe you know more about this or can remember who cut their dividend. But Greg, good morning.
Hey guys, how you doing?
Hey Greg, how's it going?
Great, thanks.
We're just talking with somebody was talking Harley Davidson. We're talking stocks that have been secular decline for a long time, and I've been arguing that I want to own stocks. If I'm buying stocks on the dips, I want to buy stocks that were strong before COVID, not stocks that were weak before COVID. What are your thoughts here? Let's talk. We could talk the automotives, even Ford and GM, because some people are saying, oh, these are just crazy cheap valuations, but these are companies that are really struggling right now.
Yeah, I wouldn't go near anything like that personally. And I mean, I think you make a bigger picture point that's important and worthy of note, and that is these stocks were declining before this outbreak. That's important to note because the economy was softening before the outbreak. We've talked about this before. You saw it in Europe in particular, fourth quarter GDP. You had already gone negative in Europe in GDP on a real basis. Then you went negative on a nominal basis in the fourth quarter. So you had the consumer in the U.S. showing signs of erosion long before this shutdown. So the outbreak really is only a magnifier, an accelerator, an intensifier, but it's not the catalyst for any of this beyond the fact that it's deepening what would have been kind of an economic pullback now becomes, what potentially is an economic black hole. So to think, again, like you said, to think that people are going to come out of this, start buying motorcycles is insane. I mean, the damage that's being done here, I think, is highly underestimated to the degree that very difficult to handicap economic data. Okay, you can throw most of it out the window, but I'll make 2 points. Number one, every economic data point has been.
I think we lost Greg there for
we just lost him. He was going to make the good point there. We got to go get Greg back. We're going to get him back, and we're going to bring him right in that mid-sentence there. So
let me try to grab him.
It might have dropped on his end, it looks like, because we're all still up.
The second point.
He's back.
Oh,
Greg,
wait,
we got to bring you back to the first point. For some reason, your internet cut out. We missed the first point. We were just getting to the good stuff. So go right back to your first point here again, and then we'll go from there.
Yeah, I would say the first point is that the economic data that we have seen, it's tough to handicap economic data. So you have to try and figure out how can I use this. And one way to use it is the numbers that we're getting in every case, and particularly in Europe, but also just in the U.S., as we've seen in durable goods and retail sales, they're worse than expected, much worse than expected, and they're expected to be really bad. That tells you a lot right there in terms of, I don't think you've priced in the worst case scenario that's actually happening versus what was expected to be happening, number one. Number two, if you take retail sales, for example, we know the March data did not incorporate the depth of decline we're going to see in April because most of the places weren't shut down. Here in Florida, people were still out partying, for crying out loud, the last weekend of March, all right? When you take the next round of data, what you're going to see is you're wiping out years of growth in total retail sales. I mean, you're going to take these things already, you're below 2017 levels. Eating and drinking establishments already back to 2014 levels. You have just wiped out all of that growth, but what you've left is all the credit that was created to basically facilitate that growth.
So, did we lose Greg again? I think we did.
Yeah, internet not stable there, maybe. Just cutting out. Not sure why that's happening. Again, we're all up. I'm up. You're up. So something's happening.
Greg, you with us?
Am I back?
Yep.
Yeah.
I don't know
We
why.
hear
It's
ya.
just it's just
I don't know.
because we're not
Everyone's on-
cutting out. You're cutting out.
Everyone in
It's
the
weird.
world's on Zoom at 8:30. From what I
Yeah, maybe that's
understand.
what it is. It's just Zoom over. But the
Oh,
Zoom's
yeah,
still
there you
working
go.
here. So
Yeah.
And man, you were just getting the good stuff again. You were right. So right when you cut out, you were just talking about, the restaurants. You were just getting into how many different businesses and the credit situation.
You've wiped out all this growth in retail sales. I mean, you've had tremendous growth in retail sales since 2014, and particularly in the eating and drinking establishments. And that is the margin of discretionary spending. So it's a really good gauge of how people are feeling about their own finances, whether they go out, to dinner or not, right? You've wiped out all this growth that we've accumulated since 2014 without even the worst data point yet to come in April. But what you have left is the credit that was created to support and facilitate that growth. That credit still exists. That credit still has to be paid back. You've already seen the delinquency rate on credit cards start to rise before this outbreak. All right. Yeah, still nominally low, but the credit is so large that even with a very low delinquency rate, the amount of debt that consumers are delinquent on is at a record high before the outbreak. Now you take away all these jobs, a lot of which are going to be permanent. This is a real mess. And to think this is going to be a V, I think is really naive and short-sighted and way too optimistic.
So, how are you positioning yourself then now? We've had a significant recovery in the S&P. I mean, they've got back over half of the losses here. A lot of companies have come back almost all the way back up. We've obviously had some companies have stayed depressed, like the airlines, like Boeing. Maybe some of the companies are kind of at ground zero for this thing. But how are you positioning your overall portfolio if you think it's not going to be a V?
Yeah, well, I think that, obviously you've had the big decline. We played it well. I mean, we trade the index futures. So we were short, we got long, we played that out. We're out now. Okay, we're flat. Okay. And I think you've had this correction. It's a Fibonacci based, as I think you mentioned earlier. Yeah. All right. I think the next wave is coming. When you look at something like the TSX 60 in Canada, very technically tight. This is such a tight pattern. It really is much tighter even than the S&P. And you're talking about having an oil influence, a commodity exporting influence. So I look at that and I think you have another wave down coming. I think the volatility, I did a special report just this past Wednesday. I called it, it's a mad world. If you remember the old movie from the 1960s by that name. And one of the things to kind of look at is the volatility is not yet even really on the long-term measures reached what it was at the peak of 2008, 2009, let alone going back to something like, 1929 or 1938. And, trying to find similarities economically is difficult because this is so different. All right. Let alone that you have all these central banks, all these, countries all over the world going on a feeding frenzy of printing money. All right.
Joel, why don't you hop in with whatever your question was?
Yeah.
When Greg,
I see his lips moving. His video's going well. It's just his audio cut out again.
I know.
It's such a good interview, man. I
know. We're on with Greg Weldon from Weldon Live. Greg, if you can hear me, I know you got.
Yeah, you can hear us now.
You got the picture. Is that the gold pit you got there in the background behind you?
That is the gold pit. And I'll tell you what, so we really want to cut this down to what are we doing here in terms of what stocks we're buying. It's pretty simple. A couple of weeks ago when the dip in gold, we came in here and we bought Kinross, Newmont, Barrick, and Nova Gold. And those four have just screamed to the upside. The GDX, the gold ETF is breaking out. It's breaking out relative to the S&P 500 as well on a long-term basis. So that's number one. And number two, buying gasoline stocks, Valero, CVX, and ExxonMobil. Because, all this disinvestment from energy, the positive side of that is you need to maintain refineries. You can't build new refineries. You need the pipelines to be maintained. If these companies have no money or they're going bankrupt, their pipelines are shutting down, making and delivering gasoline becomes potentially problematic. So gasoline futures right now at 75 cents a gallon, I think that's a great buy. And buying some of these gasoline stocks, like I said, XOM, CVX, and VLO, those are our choices.
I just want to go on the VLO because I've thought about this. I've had this stock in my portfolio a couple of times, and I've looked at this and I've looked at it recently, and it's on my shopping list. And I just look and think, the refiners, do they not benefit from this lower oil? Don't they benefit from this?
Well, absolutely. I mean, that's my whole point around gasoline because, not people are not going to stop driving, petroleum fuel cars all of a sudden just because
they might drive them more
at Harvard. Yeah, seriously. And not because the students at Harvard and Yale protest and the people at Harvard are kind of dumb enough to start dumping the stocks and tell the world they're going to do it before they do it. Okay. So, you have this total depression and disinvestment that absolutely benefits anyone that produces gasoline because it makes it more valuable going down the road. I mean, you're setting up here. I think it's a huge political mistake to say don't buy the debt of the energy companies here when you're buying corporate debt. This is what the Democrats are telling the Fed, right? That's a huge mistake because at the end of the day, down the road, you can be paying $6, $7, $8 a gallon for gasoline. So it's kind of insane the way they're approaching this, frankly.
Before we let you go, I just wanted to see if you have any comments on the massacre in Crude, the May going negative like that. I mean, I'm a veteran, you're a veteran. Have you ever seen anything like that? And just talk about the crude oil market, who the participants are, and what kind of approach you take towards the crude oil futures.
That's a more important question. I think a lot of people realize for one big reason. You have, first of all, the unprecedented collapse, which is just shows you how disvaluable commodity come, where people are willing to pay you $40 a barrel just to take their crude so they don't have to find a place to store it. I mean, that's the height of insanity. But the bigger picture is that's kind of an earthquake that has unleashed a tsunami through the credit markets linked to commodities. All right. You're talking about huge losses by some of the physical traders in Singapore. You're talking about letters of credit. You're talking about, again, this has become a credit crunch. And that's the biggest risk because a credit crunch could lead to a debt deflation. We haven't even talked about Italy and, the way the EU is dissing them in terms of giving them aid to where they may have to leave the union and bring back the lira just so they can print money, just so they can expand their budget deficit to spend to assist their own businesses that are going to badly need it. There was so much going on, and the crude is a perfect example of how basically the whole world has changed when you can't value a commodity in terms of lending against it. And this is the biggest hit: is credit is drying up, credit conditions are getting tighter, and the Fed may be powerless to address that. And if that's the case, it's like the worst case scenario for central bankers. It's like I used to say, what if they gave a war and nobody came? You remember that was the anti-Vietnam War cry in the 60s, right? What if they gave QE and no one cared? You're kind of there. You can't bail out everyone. You're buying state debt now. I mean, how insane does this get? And when does it not work? And then that's a real problem. And that's
what about the banks? Let's just bring this into a bank conversation because I'm concerned about the banks. I'm concerned that the relative strength has been very poor. They haven't participated as much in the recent rally. You look at Bank of America, you look at Citigroup, you look at JP Morgan. A lot of stocks had earnings and they dipped, but then they bought them right back. They did not buy these stocks back on their earnings. Loan loss provisions were being raised at these banks, saying that they have some concerns about potentially some bad loans that are on their books. What are your thoughts? The banks look cheap from a valuation perspective, but are they cheap for a reason?
Yeah, they're cheap for a reason. And I mean, it's global. Look at the European banks are even worse shape. I mean, it's really bad there. And what's happening too, just not to move away from the question, but this is important because really Europe is going to be a leader here. And you've seen some stress in the money markets in Europe to the point where the 3-month Euribor deposit rate has jumped to minus 15 from minus 55 basis points. This is a big deal when you're talking about, attaching, all kinds of, whether it's covenants or whether it's higher fees or whatever it is, when you're lending to the southern companies or the southern banks themselves in Europe because of they're harder hit and they can't really fix these things. Well, where's the ECB going to paper this over? All right. In the US, it's kind of a similar story because, you're talking about foreclosures, delinquencies, the whole 9 yards, bankruptcies. I mean, all this stuff's going to come to roost. And the banks are in better shape than they were in 2008, 9. And this is way different. But the one thing that's the same, and I'll tell you guys, I mean, this to me is really hitting home because the one thing that's the same is huge derivative risk on the balance sheets of these banks. It has not been whittled down that much at all. It's gone from maybe a high of around 240 trillion to maybe 215 trillion. It's still massive. It's still like 90% for trading purposes. And the bulk of it is against interest rate contracts. So again, you bring the bond market in, you bring interest rates in, and then you expose the banks big time. So the Fed is walking a tightrope, and I don't envy them their job. You couldn't pay me enough money to do what they're going to have to do.
All right, we're even on with Greg Weldon from Weldon Financial. Greg, thanks so much for the time today, and be safe out there.
My pleasure, guys. Take care.
Thanks,
All right.
Greg.
Before we end it for the week, I just want to go to something that we had talked about on the pre-market show. Dennis had brought up WLL, which is not a chart I had looked at for a couple of weeks, and I was very surprised by what I saw. They are
Yeah.
going bankrupt. I'll pull up a 5-day chart here up on
Yeah.
the screen. And Dennis, talk us through why this sort of thing happens and how you should just stay out
It's
of
your
the way.
classic squeeze. It's funny, you can't, and this is what, I said, jokingly on the pre-market show when we actually write our trading book, and I don't know if I'll ever do that. I don't know if I'll ever have the time to do it, but page
I should have
7 is
plenty
going to
of
be
time now.
page 7. Well, I don't have any time. I have less. So here's an interesting conversation. We're going on a tangent. People say, and I've seen this on my Twitter, oh, you have so much time to do everything you want. I have way less time right now than I did before I was in lockdown. You know why? Because I have 2 young kids. And when you have 2 young kids, I don't have Spencer going to school. He is here all day. So me and my wife are trying to juggle, and keep the kids entertained. So it is literally, at least a 12-hour job to keep them entertained. And when you're in a lockdown, and then I'm trading still full time. I'm trading more than I normally do because sometimes I'm getting up at 4 in the morning and trading. So you go from your normal trading hours, I'm probably doing an extra 10 trading hours than I normally do. Plus you add on the kids, and it's like I don't have time for anything. My wife and I have come up with a system because we are so strapped for time. Like she has the kids every time I'm trading. So I want to give her a break to do some other stuff, and she's got to do a lot of other things as well around the house when, we don't have the kids. And obviously we try to do, the kids, but with a 2-year-old and a 5-year-old, when you're doing something with a 2-year-old and a 5-year-old, even house chores, it takes 3 times as long. If you've ever had young kids, you know what I'm talking about. So people who are in lockdown with young kids are having a completely different experience than people who are in lockdown with older kids or with no kids. I have way less time right now, like dramatically less time. I've gotten to a point where I have to schedule even in like calls with friends and stuff, because when it comes to like when the kids go to bed at 8:30 at night, I'm exhausted because I've traded, all day, and I've had kids, like bouncing around in between my spare time. So it's, if you've ever had young kids, it's exhausting in itself. Obviously, I love my kids. They're my whole world. But when you don't get any breaks at all, we used to have babysitters come over, to give us a break. My parents would come over, give us a break. We don't have any of that now. So the kids are on us all the time. So actually, there's no time to do anything right now. So for writing a book,
I take that back.
It's hectic. And I bet
I'm
you some
sorry.
people who are listening can relate to this. If you have young kids right now, you have a lot less time than you did before at the lockdown.
Yeah, so that was a heck of a tangent, but bring it back.
Yeah, bring it back to
back to why
What was
it's
the
a bad
original
idea.
question? I just wanted to say that because I keep seeing it on my Twitter. Oh, you have so much time right now. Why don't you go and read this book? Why don't you go and do this? It's like, no,
Yeah,
I have way
all right.
less time right now. Maybe
Well,
Spencer
Dennis,
Israel
maybe-
has more time right now, but not Dennis Dick.
What about me? Can I virtually babysit or something like
Well,
that?
that'd be nice, but they'll watch you for a few minutes, and and we do actually. It's funny you say that. A friend of ours, and a very good friend, Lily. She listens to the show sometimes, and she does actually do some schoolwork with Spencer sometimes on the iPad. So she's been great for us. So Lily, if you're listening, or Julie, you're listening, thank you so much. So they do get Spencer on that iPad for a little bit, but again, a 5-year-old's attention span, is difficult. They don't have attention span for more than 10, 15, 20 minutes, and then they've got to do something else. It's just the way it is.
All right, go back to Will. Go back to WLL. I'm sorry.
Go back to WLL. So I was talking, this is just your classic short squeeze. So people, and I was saying, if we were at page 7 of our trading book, would say, don't short stocks that are under $1. And a penny stock trader is going to hate me for saying that. I don't trade penny stocks. I trade other stocks. Stocks go under $1, I'm done with trading them, because here's a classic situation where you're shorting the stock thinking, oh, I'll just short a whole pile of stock at 34 cents because it's going to zero. Well, PCG taught us stocks that are bankrupt don't necessarily go to zero, and they don't necessarily do it right away. Is there going to be some value for equity holders at the end of this bankruptcy for WLL? Maybe, but there's probably not going to be much, but it doesn't matter. The borrow rate on WLL right now is 89%. So it costs you 89% a year. So roughly you're talking 1% every 3 days. So you lose, and that's not much on a dollar stock, but it's significant. The locate is probably not that easy either. I haven't tried to locate it. I'm sure you can, but it's probably not that easy either. So the mechanics behind it are probably just getting squeezed here now. People who are shorting this at 50 cents, 70 cents, saying it's going to zero are gasping, and they're like, what's going on? So you're in a classic let's squeeze them scenario here, and these things can get ugly.
All right. Yeah, I don't mess with those. I mean, on the long side or short side. But we got some more numbers to cover here. 854 S&P's just sprinted up to 2811.75 once
Buy the
again.
dip.
Yeah, buy the dip. I wish I would have bought the dip instead of shorted the rip. But
I usually trade overnight hedged, but last
Yeah.
night I was like, we were down at 270 and change, or 277 on SPY, and I was like, I'm looking at this Gilead, and I'm like, okay, yeah, we had some news, we had some, obviously did a little bit of a chip wreck with the Intel. We had Google, which we didn't even get to, which was cutting their advertising spending.
yeah, is that huge or what?
It was big enough that they knocked Google down significantly last night. It's bouncing back here this morning. Again, the buy the dippers lurk below, but I just thought, like, I think this market's going to rally here overnight again. So I actually went long a little bit more than I'm normally. So I was actually net long in my trading account as of last night, and I'm getting rewarded for it because here we are. We were down 2 points on SPY last night. Now we're up 2 points.
Can
So
you
you're talking
can you
about a
text
4-point
me?
rally from the
Can you
lows.
text me if you go one way or another at night? Like, like
Usually I'm wrong when I go one way or another. But I'm lucky right now. It's when you're in the zone, you're in the zone, right? I'm in this trading zone, so I feel like I've been making pretty good calls. I've been doing pretty good in my long-term portfolio. In the stocks that I've purchased here, and I've been doing pretty good in my trading portfolio.
You're being corrected.
It'll turn.
You're being corrected in the YouTube chat by
Sure.
capital B, capital M, and
Yep.
it says you're quoted in the intro as saying, "I'll buy the penny stock. I'll buy it for a penny."
No,
No, it's not a penny stock.
No, he said I'll buy. He says I'll buy that stock. I think I'll buy it.
I
for
didn't
a
say I'll
penny.
short it for a penny.
No. He said I'll bid a penny. He said I'll bid a penny.
I'll buy that stock at a penny. That we were talking with stub quotes. The intro. So if you're just new to the intro, like, what does that mean?
Which Spencer cuts off.
What does that mean? Okay,
That's not
so
my fault.
back during the flash crash of May 2010, your market makers always had to post a market. This was the rules back, from forever. So designated market makers had to make a market. So what they would do is if, they go to the bathroom or whatever, they just always have a stub quote out there where the stock would sit, with a 1 penny bid. So your stock, like, this was used General Electric, for example. They would have a stub quote out there if they, because they always had to be making a market a penny. What happened was during the flash crashes, everybody pulled all their bids. And actually, some of these stub quotes, the stocks that got a penny, they had Accenture trade for 1 cent a share, actually got hit. We know they busted all those trades, but that's where that comes from is, I'll buy all these stocks for a penny. So that's you watch this intro every day, and that's the story behind it. It's the market maker obligations to post a two-sided market at all times. And the way they met those obligations back in the day was they would bid a penny on all stocks. And obviously, they're bidding elsewhere too, but they would always have the penny stub quote out there, so they were always meeting their obligations. Now they've tightened up those obligations to a certain extent. The stub quotes, they've got to be a little bit tighter than that. But for the most part, we don't have the market makers like we used to anyways. We don't have a lot of affirmative obligations anymore. A lot of it's high frequency market making. But during the flash crash, you saw, I believe it was 360 stocks or whatever traded down to 1 cent a share.
Accenture
was one of them. It was at $38 a share. It traded to 1 penny. And then it went all the way back up. And the people who bought it at a penny
got busted.
All those trades got busted. They busted anything that fell more than 60%, meaning that the trade, they just killed the trade. So it didn't exist anymore. And that was a kind of a horror story. And it's a complete mess. And that's when they put the circuit breakers in. They put a lot of Band-Aids in so that wouldn't happen again. But that's where that comes from, is I'll buy that stock for a penny.
All right, Spencer, we got about 2 minutes here. Do we get, we still got some more stocks on the list?
Well, there's always more on the list, but we covered most of them. The only one on my list we didn't really get to was AXP. They had earnings this morning, and I hadn't even looked at them, actually.
Stocks trading up.
Yeah.
Quick technical, Joel, AXP, and then I got 2 more other stocks I want to cover.
Yeah, you had the dip, you had the rip. I don't know. This has been kind of quiet. Not really rebounding as much as one would like. Pre-market high. Looks like you got someone that wants out at 85, or just under 85. So, that's on the 15-minute chart. Looks like there's resistance at 85 if you get up there. On the dailies, 85.27, 84.78, 2 of your last 4 highs. So if you get up in that area, that's major resistance. Coming back on the downside, I see a couple daily lows right under 82. So 82, 85, that's your early trading range. Negative on the stock is not much of a rebound off the low. That people aren't super interested in using the expensive American Express card. So not a good looking long-term chart. I mean, you really need the economy to get going, everyone going back and for this one. So 82, 85, that's my early trading range in AXP.
Two other stocks I had on my list just to mention quickly. TREX. Iceman was on CNBC last night. We know him from The Big Short, and he disclosed this was one of his new short positions. TREX, I believe they make the wood for the decking, but that's composite. So I believe that's correct, isn't it, Spencer? TREX. Yeah. So anyways, this was one of his big. So the stock's trading down 5% off Iceman's comments on CNBC last night, and then we got a new stock here. So DEAC, which if people have been following that, turned into Draftkings here this morning, DKNG, and the stock is trading up from where the DEAC, was it DEAC? That I believe it was.
Was that it?
I might be getting it wrong.
Diamond is still trading as of an hour ago. What was the ticker on that? Diamond, it was here.
I thought it was DEAC.
Yeah, you might be. I think you're right. DEAC.
It's gone now. So it is now DKNG.
Okay. Well, it was still trading as of like 7:30 this morning.
It's gone now. They've turned it into DKNG. So your DEAC became DKNG.
This is not a trading recommendation at all. But can you think of a worse timing for like DraftKings or anything that's sports related with the uncertainty we have? I mean,
it's a sports betting company. What sports are they betting on?
Exactly.
I don't understand what they're betting on, but obviously,
unless you're going to take the flip side of things and like they're going to have the NFL, but like no people at games and people.
Well, they probably were betting on the draft, right? Where they were able to make bets on the draft last night. That draft would have been watched last night. So
it was. But
I would imagine they probably had betting on the draft.
Did they do that, Spencer?
Yeah, of course.
I would hope they would.
Who they were? I don't. I mean, I watched it for 5 minutes, and I'm like, I mean,
who did the Lions get?
A cornerback
from Ohio State.
The guy they thought they were going to take.
Okudah, is that his name? Jeffrey Okudah.
Yeah.
Actually, the first 3 players all had Ohio State ties. Joe Burrow transferred out of there. Then Chase Young went second. And then the Lions took Okudah there, and you had one Michigan player in the first round. Cesar Rez went to New Orleans, so it was all right. I followed it a little bit, but Dennis, any final comments here on this Friday? We're trading strong in the green.
Yeah, we're in the green. Buy the dip is still ruling the day. I mean, that's why you look at a stock like Intel and you think, could they potentially come in here buy the dip? They could. So there's a lot of money managers who are underinvested right now, using the same opportunities that I've been using to rebuild my portfolio, as using the dips on the individual stocks to get stocks that I like. Obviously, I think I've got quite a few stocks back here now. I'll have to reanalyze my cash position because I just continue to slowly get to work. It's still significant. Don't kid yourself, because I'm a little bit on Greg's side that I don't think we're getting right the hell out of this. But at the same time, I'm buying quality companies that I feel like can do well even during a pandemic. We know I bought Microsoft. I've talked about my Qualcomm purchase a while ago. I did buy Twitter a while ago. And obviously recently, I just said yesterday, I bought Target. So there's a few stocks that I'm nibbling on here, but I did rebuy my Peloton too. Although I'm torn on this one. I'm really torn because I obviously, valuation guy, I don't really like, the Peloton valuation. Obviously, they don't even make money. But I just think that they're going to have good numbers this quarter, just because everybody's in the lockdown.
And worth noting, all your buys, you don't even think about the amount. It's all the same to you, right? You're making the same quantity.
It's similar. Yeah. I usually have like a bet size in my mind, of a percent of my account. I'd say roughly I look at like when I'm putting a bet size in, it's like 1%, 1 to 2% of my account. Yeah. So saying, if you have 50 to 100 stocks, you're probably fully invested. At one time, remember last year, I said I had like over 100 positions. I was looking the other day on my main account, I have like 37 only. So, I mean, I raised some cash, like seriously raised some cash. It's up from there now. Like, I'm sure I'm up to like 55, 60 positions again. So maybe I'm approaching like 40, I might be approaching like 45% equities here again. I raised, like, I didn't raise it. I always carry. So full disclosure, I never go 100% in. I went through the financial crisis. I always have a significant amount of cash. I just never have as much cash as I've had. So, I did raise cash, obviously, back in, March, January, which was way early. We talked about that. So, I'm never going 100% in on equities because I went through the financial crisis and I said I never would. I always like to keep a cash buffer. But I buy a lot of preferred stocks with that cash, and I sold a lot of those too. I've been trying to buy some of those back as well. On different stocks. Like in Canada, there's a Loblaws preferred, which is a grocery store in Canada, the biggest grocer in Canada. I was buying a preferred stock on that was yielding 6%. I was like, I don't mind loaning 6%, getting a dividend of 6% on a grocery store, that I feel like is going to be there. Same reason why I bought Target yesterday. I feel like Target is a good company, reasonable valuation, and will be okay if we're in a lockdown or we're in social distancing for a longer period of time than is expected. So that's what I'm looking at is companies like this.
All right. I'll wrap. Yeah, I want to wrap it up here.
We're paying you overtime today.
That's okay. The chat is noting that I do need a haircut. Yes, I do. Maybe I'll make that my weekend project. But I want to thank our guest, Greg Weldon. And thanks to all of you in our chats. We love their participation both on YouTube and on premarket.benzinga.com. You can always catch a replay of this broadcast on YouTube or via our podcast on whatever podcast platform you prefer. For a free trial and discount to Benzinga Pro, click on the link in the description of this video on YouTube. And I guess last thing, please remember all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Everyone have a great rest of your day.
One more thing.
Yeah,
we're back at 340 today to wrap up the week, and we'll see. We'll see where we are, see how we end the week. But right now, we're poised to have a good week. We'll be back at 340, folks. We're getting a good turnout. I appreciate everyone popping in at that time.
All right. Everyone, have a good one until then.